It doesn't matter whether you are a corporate that is competing with another corporate. Everybody reaches a new level of efficiency when participating.
The idea is actually that people start collaborating on a blockchain.
All right, I hope you are all awake after this short video. Again, welcome everybody to the financial services track. It's great to have you all here. And we look forward to 2 hours of good confident content on blockchain for financial services and decentralized finance. My name is Ricardo, and I'm Vice President at BerChain, one of the organizers of this event. So the webinar will be recorded, and it will also be streamed on YouTube as we speak. The YouTube link is going to be available after the event, and it's going to be available on our YouTube channel, and it's also going to be posted on our social media channel. So for those who are not able to follow the event in real time or the full event during the time that we are here, you can use the YouTube channel of BerChain to re-watch the event afterwards. So I will quickly guide you through the agenda, and then I will hand the word over to our moderator. So we will start with a quick introduction of the agenda of what we will do. And then I will hand over to Rafael Schultz, who is our moderator for today. He's going to give a short keynote on the blockchain for financial services and fintech space in general for the newcomers to this world to have an overview, which is followed by 3 use case presentations by Stani from Aave protocol, by Markus from Clabs, and by Craig from Dstoq. I won't say too much about these use case presentations to not take away the interesting part. And the 3 use case presentations are then followed by a 35-minute panel and Q&A discussion, which is attended by our 3 speakers and moderated by Rafael Schultz. During the webinar, you can ask questions using the Q&A functionality that you see. And we have plenty of time during the panel discussion and after the panel discussion during our buffer time to answer any questions that you might have. So without further ado, I would like to introduce Rafael Schultz, the first speaker of today, who will be moderating the panel. He is the CEO of Blockchain Punk Labs and has been active in the fintech space for many years and will be guiding and moderating our session here. Without further ado, Rafael, the stage is yours.
Yes, welcome everybody, and a big thank you to Ricardo for the nice introduction. Yes, the Blockchain News Conference is all about use cases which are actually happening. And today we will focus and kick off with what is going on in the financial services. There are a lot of buzzwords like DeFi. There are also like the old payment companies, digital banking. There are some fusions, and we will have to get. I'm also delighted to share with you my screen. So we will have like a short overview about what's actually is going on in the market. I'm also delighted, and I would like to kick off with a short introduction of our attendees. So I'm very happy to welcome also Greg McGregor. He's the Chief Executive Officer from Dstoq. Then also with us is from Celo, Markus Franke. He's partner at Clabs. And last but not least, Stani Kulechov. He's Chief Executive Officer of Aave. So before we jump into the 3 use cases which we are having in our panel discussion today, I would like to give a brief of what BCP Labs is doing and why we are having a fintech overview in here. So BCP Labs is based also in Berlin, and we are official founding member, like one of the first members of BerChain. So what we do is we are coming from the old fintech world, from MasterCard, Visa payments. And 3 years ago, we started to link the old payment world with new payment worlds, which means that there was like lots of associations like BerChain who are globally aiming the same target. BerChain was founded to build that in Berlin and to link blockchain use cases also with the corporate world. But there are also many other associations, and we are part of that. Same as with BerChain, we try to link the gap between the countries, because fintech is borderless. We talk about cross-border solutions, decentralized cross-border solutions. And what are we going to discuss is that I would like to briefly give you just one example of a use case, which is also in our portfolio. And this is Bitwala. Bitwala is also a Berlin-based solution. It's the first digital bank who has a Euro account and a Bitcoin account. And it's a nice example how a partnership between Bitwala Germany and Celsius network from the States is growing, and also is a use case for financial service mass adoption. So how does it look like? If we just grab that example about a trend in the market. So we have on the one side Bitwala. It's a fully regulated service with the German BaFin authorities. It's very basic. You get a Euro account for free, you get a MasterCard on top of that, and you can buy your first Bitcoin. And even the Bitcoin is like saved, the wallet is saved via a normal bank account. So we're not in pain of losing a complicated code. It is very easy. It's so easy that my mother or my brother can use it. On the other hand, this is like not enough. The financial services, they are rich of digital assets and of trading. So that's why they're fusioning with Celsius network. This is a service from New York, which is like specialized on giving you interest on your Bitcoins. So if I hodl my crypto assets, I can get now interest from Celsius network based on that. And this is a nice use case just to show how the DeFi world in financial services is connecting to the normal local bank account. And this is a nice bridge where we can reach mass adoption in financial services. So let's have a wider, broader view on that. And I'm just wanted to share with you overview about DeFi versus classical fintech. So what you can see here is lots of logos, and it's on purpose because the market is extremely growing. We have big investments there, like one of the players here N26 also raised in this year 100 million. A lot of VCs are going there, and they are going on purpose because they feel that this is, beside of digital banking, the next big thing. And on the left side, you can see a DeFi overview about tokenization, about asset management. And we see projects which we are aware of. We see that Cosmos, we see that Polkadot. On the right side, you can see the full fintech ecosystem. So also classical digital banks and not crypto solutions. So if we compare these two, and this is green highlighted, you will see that even in the fintech ecosystem, the blockchain or DLT space is very, very small. It's just the beginning. And what we see now that the brands they are all compliant with local regulations. They try to stick to the market and play with the rules of the market. And this is now also the question and the challenge for the next use case scenarios in the DeFi space. How much can I be regulated? How much do I want that to achieve mass adoption? And with that overview, the challenge is now to see how our 3 use cases will fit into that financial ecosystem, because they have identified a specific use case and they would like to go and make the market ready for us. So I'm very delighted to hand over now to Craig, who will present us his use case scenario in the financial DeFi space, Dstoq. Craig, can you take over?
Yeah, sure. With pleasure. Thank you very much also for having me here, and thanks to both BerChain as well as Berlin Partner for putting the event on. Very excited to first of all present a bit about Dstoq and also get into a bit more of a discussion afterwards. So without further ado, I'm just going to quickly share my screen. All right, so Dstoq. Dstoq, we would like to essentially invite you to enter what we call the people's market. And what we're trying to do at Dstoq is to make investing accessible and affordable for people in emerging markets specifically. So I myself, I come from one of those markets. In fact, I'm South African, and many years ago, our company, it's been around for about 2 or 3 years now. And we saw a problem in the world, which was difficulty that people have specifically in emerging markets when it comes to transacting cross borders and especially investing cross borders. You may or may not be surprised to know that 71%, in fact, of millennials would rather visit their dentist than their banker. And I think this speaks to the fact that the financial system on a global basis is pretty broken in a lot of ways. And there's a lack of trust in traditional financial institutions, I would say generally. And nowhere is this more relevant than in emerging markets themselves, which is exactly where we focus. So if you look at some data from the World Bank, they actually, I think it's fair to say that financial markets, they are exclusive and historically have also failed to provide access to people in emerging markets themselves. So if we look at investing as a percentage of the economy, you know, how much of GDP each year goes into stock markets, in developed markets, using G7 as a proxy there, almost 100% of the economy every year goes into investing. And what that means is that people in those countries, they get to grow their wealth over time as the economy itself is growing over time. This is just a natural, obviously, the cycles that the economy goes through, but people in those countries are much more exposed to possible upsides from investing relative to emerging markets where that number can be as low as 20%. And often the reason why it's so low in emerging markets is literally just a lack of access. You know, the products aren't there. It's not possible for people to interact, or if they want to transact, it's so expensive that it's just doesn't make sense for people to do so. It's not the case that people aren't investing. And in fact, there is a massive demand for it. And a study done by the Bill and Melinda Gates Foundation found that in emerging markets, actually 43% of people are saving money every year. But often what's happening is it's more informal types of saving because of that lack of access that I mentioned earlier. So, you know, it could literally be putting money under your bed. There are examples of people doing that, but not all of those, you know, numbers really show up in the statistics because often it's these informal types of products. And that's where I think blockchain can be extremely useful. And in terms of how we look at the world, there are, in our opinion, 13 key countries that we look at that are, I think, very, very interesting from a variety of factors. We look at, you know, demographics, we look at savings rates and the population, growth of the population, things like that. And obviously general access to global financial products. And in those 13 countries, you've got more than 400 million people that are spending money online every year. And 43% of them are saving money. So you've got almost 200 million possible retail investors, 50 million of which are millennials, which we think is the sweet spot where basically people are willing to adapt new emergent types of technology. They're focused on mobile applications, and they oftentimes also don't necessarily want to deal with a bank or anything along those lines. And so, you know, how can one company give all of these people access to investing? And that's where we come along with our usage of blockchain, essentially. And our solution itself is what we would call Robinhood for emerging markets. So on our app, users pay 0 commissions. There's no fees. You can invest into stocks, you can buy bonds, you can buy funds. That's basically ETFs. And in doing so through the app, we provide people with access to, you know, global financial markets, and they can access it from anywhere in the world. All the transactions are happening on chain, on the Stellar blockchain, in fact. So any trading that happens and things like that, say, for example, a user from South America wants to buy or sell a share of Tesla, they can do so directly with someone in Africa, and they connect through the blockchain. There are no intermediaries in between. That's how we can access all of these different markets. And it's a non-custodial, fully non-custodial approach. So users are always in control of their own assets. All of the transactions, as I mentioned, are happening directly on the Stellar blockchain. There's also a DEX that's built in there that is leveraged essentially, and we're really giving the power back to the people. And given that this is actually a blockchain in use conference, I actually thought I would do a little demonstration of the app itself. So let me just pull up my phone quickly. Give me a second to connect it. and then I'll show you the app itself. So, okay, here we have it, Dstoq. And what I think is really interesting is that you might not even know that there's blockchain happening when you look at this app. And that's been our whole purpose all along. So I'll show you around the app a little bit, and then I'll actually go and place a trade and show you how that works. So when you open the app up for the first time and you've gone through the whole onboarding process, you're shown the trade screen. You can see a variety of different assets here. So you can buy shares in Apple or Tesla, for example. There's some funds and some bonds. You also look at your portfolio and see which assets that you're holding, also how's your portfolio performed over time. You can see here, we'll do a trade of Tesla just now, but you can see here, currently I'm not holding any Tesla, and we'll come back to that one a little bit later. We also have a learning section of our app, which I think is something that we'll definitely touch on in the discussions afterwards, how to educate people and how to get people really to have a product that has some mass market appeal. And then, yeah, there's a few other sections in here we can look at in the app later. But let's go through an actual example. Say I want to buy some Tesla. You click through here. This is all happening on chain. So this is actually the security token of Tesla with the share held in a custodian bank in Europe. And if I want to buy some of it, just click onto the buy section. You can see at the bottom here in terms of available, it's like $20 in this account in particular. And the price of Tesla right now, it's like 420. And if I want to buy, let's say, $10 worth of Tesla, first of all, it's pretty awesome that you can do fractional shares. In a lot of other places, if you wanted to invest, say, through a bank, you would have to have a minimum of 429 or 22.99 in this case. But with us, you can buy just $10 worth, and for that, you would get roughly 0.24 units of Tesla. When I click preview, it's just going to show me what I've put in here in terms of the offer I'm going to place. You can see again, no fees. And when I click buy, what's happening is actually a blockchain transaction is created by the user on the phone. It's submitted to the Stellar blockchain where it's broadcast basically. And that's essentially it. So that's it. I've now placed my offer. And there at the top, just got a notification that the offer is complete. So I've literally just bought $10 worth of Tesla, and that happened all on chain. And I think the beauty of it is it's so fast, you don't even know that there's blockchain involved. And this is something that's really important to mass adoption. And yeah, you can see Tesla, $10 worth, bought 0.24 units of Tesla directly like that. We've also got some other cool features. Actually, this is an announcement and something we'll be rolling out later this week, which is a referral program where you can get a bonus when you invite your friends to sign up, and they also get a sign up bonus. It's actually pretty cool. We can track that whole thing also on chain, so you can see how many of your friends have registered, how many have gone and placed a trade, what can you claim in terms of your bonus. This all gets paid out directly to your account. I think it's very, very interesting that in a lot of what we're seeing here, it's all basically on chain, but from a user perspective, it just looks like essentially any other type of app. So that's pretty much the majority of what I wanted to cover in the presentation itself. Happy to talk and address a variety of other things down the line. But yeah, without further ado, I would like to hand it perhaps back to Rafael to hand it on to the next participants or presenters.
Yeah, great. Thank you. It's wonderful to see like a nice use case where people then can just actually see how to use it. Yeah. So just a short follow-up question on that. Like, would you say that buying just for $10 Tesla, a piece of a Tesla asset is like one of your USPs, your main USPs?
Yeah, certainly. I mean, I think having no fees is the biggest one. It makes a massive, in South Africa, for example, right now, if I wanted to buy a share of Tesla and I wanted to do it through my bank, which is basically the only option, it would cost 10% in fees. So I'll be paying, first of all, you can only invest with a minimum of 420. Then you're going to pay like another 50 euros or something on top in fees, which really starts adding up. And that's our main value proposition, is that there's no fees involved in it. Another big one is definitely the fractional share side of things, where people can come in with smaller amounts, and our system is so much more efficient than the traditional banking system that we don't have very many costs, in fact. So it's for us not a problem if people are trading small amounts, and if there's more and more people doing that and getting comfortable and over time growing their value, even by just investing a little bit and leaving it for a few years or putting in some small amounts every month. Yeah, that's a massive thing that we definitely pride ourselves on. And I also think we can perhaps talk to it a little bit later, but improving people's savings and habits around investing is really important. So allowing people to do so with just a small amount of money to get them started, get them comfortable is very, very crucial to our business essentially. And yeah, it's one of the big drivers we think that puts us in a position where we can have mass adoption.
Yeah, this fractional investment is like, I think, a big thing, and this is like to decrease the burden for new users to use it. What would you just say as a closing question, and then we proceed to the next presentation? What is like your ideal candidate? What is your normal classical target user?
So it would be someone who is around the age of like 28 plus. We find is a sweet spot where a lot of people are getting to the point where they have a little bit of disposable income. And we're focusing a lot on first-time investors. So someone, let's say around the age of 30, who is tech savvy and interested in new products and is sitting in a country that has very high inflation and wants to basically diversify some of their wealth abroad so that they're not only exposed to their local currencies. And there's a lot of different countries where exactly that is true. And especially now with COVID, it's been very, very interesting to see even just the spike in Google terms for people looking at how to invest, where to invest, how to invest abroad, all of these things. And that for us is the ideal users that we would want in the beginning.
Sounds good. We will discuss it further then in the big panel. So thank you very much for showing us your nice example.
Sure, thank you.
So while having that and Craig made this presentation, I would like to hand over now to Markus. And Markus is representing Zello. And I need to say that this was one of my first applications back like more than 2 years ago, which I was like downloading and testing and opening and playing around. So I was very keen that you were also in this panel, and I'm super happy to see what is today's status quo of your solution.
Cool. Thank you very much, Rafael. And also thanks for moderating this, this panel. Can you see my screen?
Yes.
Perfect. Cool. And also thanks to Ricardo and Berlin Partner and BerChain for hosting this conference about blockchain use. It's always exciting to talk about the real use cases. And yeah, maybe also thanks a lot to Greg for already setting the stage on financial inclusion and talking about access to financial system in frontier markets and in emerging markets. So maybe what you can see on this slide then is already well known to this audience, while we have a number of smartphone users that is expected to rise to over 7 billion by 2025. There are still many people in the world who are or underbanked, and while there's substantial money supply going around in the world, the access to it is limited, and especially users that have access to crypto are currently very low. So we don't see real adoption yet, while we all probably in this panel think this is a very powerful technology. Zello's mission in the monetary system, or in the monetary way, is to build a financial system that creates the conditions for prosperity for everyone. To explain how the Zello community would like to improve financial inclusion, I would start by talking about what Zello actually is. In one sentence, Zello is an open platform that makes financial tools accessible to anyone with a mobile phone. What does this mean? Breaking down that sentence, open platform means it's an open, permissionless proof of stake blockchain, which is very fast, highly scalable, fully decentralized. Financial tools can mean transactions on a blockchain, like sending remittances. But it is a smart contract enabled platform, so also programmable features in the decentralized finance world are enabled on Zello. And very important for Zello, it has a strong focus on mobile phones, as many people in the world have access to a mobile phone, and we think that the real adoption comes via mobile technology. To give you an overview on what Zello can mean, so Zello is basically or took a full stack approach. On the bottom stack, there's the Celo blockchain. It is based on CK-SNARK technology that allows low resource computers to access the blockchain in a very fast and highly secure way. As I said, it's open source, it's decentralized, it's a proof of stake blockchain. And on top of that blockchain, there is an application layer. There are already existing applications like, for example, a wallet, the Valora app, which is a digital payments app that is also fully decentralized and running on the blockchain. To talk a bit about the protocol itself, since we have many blockchain experts here in this panel and also in the audience. Key features of the Celo protocol are the mobile identity feature. So we developed a lightweight identity protocol that maps hashes of phone numbers to public keys to make it very easy to anyone with a mobile phone to send and receive digital currencies. It is, the whole blockchain is optimized for fast synchronization, for ultralight clients. Since it's based on CK-SNARKs, it is a blockchain that is 17,000 times lighter than many other blockchains out there. It has built-in stable value currencies, like for example the Celo dollar, which is live in its circulation. It's a currency that is following the value of the US dollar, so it could be called a stable coin. And as I said, it has a smart contract feature on the blockchain. Additionally, and the Celo blockchain allows you to pay for transaction fees in the same currency that you do transactions in. So if you, for example, send a transaction in Celo dollar, you can also pay for the transaction fees in Celo dollar. Unlike to many other blockchains, which is probably hard for non-crypto natives to understand, if you want to send a transaction in a stablecoin that lives on Ethereum, that you also need Ethereum in your wallet to send that transactions. Since it's a blockchain in use conference, I want to talk a bit about the use cases. The Alliance for Prosperity is an alliance of mission-aligned organizations, currently around 120 mission-aligned organizations that are committed to leverage this technology, the Celo platform, for applications in different use cases. These use cases could be to build on top of the Celo blockchain. As I said, it's fully open source. Use cases could be saving, paying for goods at merchants, sending remittances. It could also be around charity, giving, or lending, earning. All these use cases are enabled on a smart contract enabled platform. And to actually see adoption in markets, these members of the Alliance for Prosperity help with in-market adoption. And some of these members you can see on the slide. So for example, when talking about the charity aspect, you see on the slide that Mercy Corps or Grameen Foundation or Give Directly are, for example, members in the Alliance for Prosperity and want to use Celo technology for example, remittances in markets, in frontier markets, or for other use cases. But in this talk, or in this short talk about Celo, I want to focus on one very specific use case. And this is an example of a project that ran over the last weeks. Here on the right of this slide, you can see Soledad. She's 72 years old. She lives in the Metro Manila area on the Philippines and is a micro entrepreneur. And during the COVID-19 crisis, she and also her household suffered a lot since before she was selling packed meals to different offices. She also worked as a cook in a small canteen, all things that she couldn't do anymore during the COVID-19 pandemic. Soledad was a participant of a relief payment program, which was run by Grameen Foundation, and this COVID-19 relief payment program distributed funds to 3,500 women entrepreneurs on the Philippines. Grameen Foundation here worked together with different other projects, for example, Beam and Go, Autonomy, Anchorage, Kiko, OKCoin, and many more. And they used Cello technology to distribute these funds. I chose this example here because it's one of the first examples that uses blockchain technology for a charity program, especially in the times of a pandemic, the COVID-19 risk. Using a platform that focuses on mobile and that allows to enroll beneficiaries completely remotely has a lot of value because you can reach a lot of people across distance. And in this program, the beneficiaries enrolled with a mobile app, the Valora app that is living on Cello. The total onboarding on average took less than 20 minutes for everyone, and then they could use the funds they got in this app for buying groceries. Most of them used funds for food, medicine, hygiene products at local merchants that were taking part in this program. I also quickly, since this is a initiative that was run by many different projects, wanted to call out Grameen Foundation and the work they are doing in these markets. And I'm very happy that they are trying out blockchain technology for these use cases, as I think it is a very powerful technology for that. So thanks a lot for your time, and I'm looking forward to the panel and the other talk.
Yeah, thank you, Markus. Also impressive to see that there is like a lot going on. You mentioned that there are like 3,500 people who are like receiving like support at all based on the solution. So my question is, do you know how many users you have in total for your for Cello?
So it's a very good question. I mean, the nice thing about this technology is it is fully open source, and I really believe in open source to reach a lot of people with this technology, since you can or enable a lot of other projects to build on top of your technology. It's hard to estimate how many people you could reach with it. Of course, we hope to reach a lot. Currently, the Alliance for Prosperity members have more than 500 million users. Within the Alliance for Prosperity, there are mobile carriers, there are organizations like the GSMA. There are also many local projects in Africa or in Asia or in South America that already have live users, and we hope that we can reach all of them with this technology.
Well, yeah, this is impressive. 500 million, if you just take 1%, then you have already like 5 million setup in terms of users. So interesting, promising. So what I would like to do is go to our last but not least third promising blockchain use example. And I would like to go over to Stani from Aave, and please share with us what you guys are delivering with your platform and how we can use it in future.
Thanks, Rafael, and pretty interesting use cases so far. So I hope this use case will be equally entertaining and useful. Do you all see my screen now, right, with the presentation?
Yes.
Okay, got it. Let me just quickly find, yeah. So our use case is more related to the decentralized finance, which is practically a quite interesting topic these days, especially because the space has grown quite substantially. So decentralized finance is about creating services that practically do not take custody of your funds. So in the same way, when you are generating Bitcoin or Ethereum address, you're basically storing those funds yourself. So you're not trusting third-party custodians for your funds. And this is kind of like the idea of decentralized finance as well. And let's say practically Ethereum or Bitcoin is decentralized finance. And today the decentralized finance is more about an ecosystem and also the ability to create financial products that are accessible in a non-custodial form. And also one of the benefits of DeFi is that practically you have transparency of the public blockchain. But besides that, all of the access is permissionless in the sense that practically when you build traditional applications in traditional finance in the Web 2.0, if you want to build a new application that shows your account details from multiple banks or electronic money institutions, you basically have to have a permission of those APIs, and in that sense, you also need to comply with the terms and conditions. And the idea of decentralized finance is that practically everything that is deployed into the, let's say, main Ethereum network is accessible to you as an end user and also as a software developer. So you could create any kind of application that interacts with any kind of smart contract that is deployed in the Ethereum ecosystem. And that's the kind of like a value proposition. And because everything is public, it provides more transparency into these new financial systems. So what Aave actually has, the Aave protocol, it's a money market protocol, which means it's a set of smart contracts that are deployed into the Ethereum ecosystem. And smart contract is practically a piece of code that once it's deployed and shared amongst the node holders of the network, it's very difficult to change. In the same way, it's very difficult to change, for example, the Ethereum blockchain or the Bitcoin blockchain. And essentially what this allows you to do is to do transactions or set of transactions counting on the fact that once you deploy a piece of code which has certain kind of functionality, no one can go and change that functionality in its default nature. And what we have in terms of financial application is practically money market, which means that our goal is that that Ethereum-based assets, since we're deployed in Ethereum, have interest rates. So today, many of the cryptocurrency holders, or let's say even stablecoin holders, are holding those funds without any interest. And our goal is to get interest rates on those funds, allowing the users to deposit into the money market protocol that we have. As a protocol, it means that we can create multiple money markets, and each and every money market has practically a reserve, actually multiple reserves of certain currencies. And this means that when you deposit in a specific currency, which could be, for example, stable coins such as DAI or USDC, someone else, after depositing a currency, could borrow the currency you deposit. So they're putting something else as a collateral to borrow, for example, stable coins. Pretty typical example is to deposit Ether or some other ERC20 token. Could be Aave tokens, Link tokens, or some other tokens that you are in a long position and borrow stable coins. And because there's this consumption side, what happens is that you are getting paid for your deposits into the protocol. And here's a bit of data on the users that we have currently. So at this moment, we launched the protocol at the beginning of this year, and we have roughly 20,000 users, cumulative Aave users at the moment. And it's quite interesting in the sense that the protocol started from zero in the beginning of the year, but we already started to develop decentralized financial applications back in 2017 with our previous brand ETHLend, which is short for Ethereum lending. And 2 years ago, the space was quite small because the ecosystem was pretty small. Now that there is multiple different kinds of protocols in the decentralized finance, it vacuums more users because there is more usability. And in terms of active users, the Aave protocol has roughly from I would say 200 to 300 users per day that are actively either depositing their funds or borrowing. Also, we have this functionality called flash loans, which I will explain a bit later. So as a protocol, we kind of don't focus in the activity of the users, because once you deposit into a money market, you basically earn interest. So you're actively earning, but you might interact with the protocol more rarely compared if you will be some sort of a trading protocol. And what is interesting about this graph is that we have more interactions on the deposit side and less interactions on the borrow side. So there's more supply and interest, basically more people earning interest compared to the people that are actually borrowing that interest, that capital. And one of the things about decentralized finance is that when we are measuring the kind of like a extent on how big the protocol is or how trusted the protocol is, we have this measure called total value locked, which means what is the USD equivalent value of assets that is locked into the protocol. And it's kind of interesting because some of the DeFi protocols they might be trading protocols or they might be lending protocols, but they're using this common metric to measure how much users are trusting your smart contracts, because security is the paramount of not just decentralized finance, but the blockchain. It's the value proposition that it end of the day offers. And during this year, we have roughly had from 1.5 to 1 billion worth of value locked in our smart contract, which basically means that that is the amount of value that you could actually borrow from the protocol. Of course, the market size is a bit bigger because there's already funds that are borrowed out against collaterals, which means that since 75%, well, let's say 25% are only borrowing from the protocol, you could add up that number to see the whole market size of Aave. So it's somewhere between 1.25 to 1.75 billion, which is quite substantial growth during this year, given that how small DeFi has been and still actually is. And since there's always more practically reserves, so there's always more deposits than there is borrowing, it practically means that the borrow rate is different than the deposit rate. But the beauty of the system is that you don't deposit it for a fixed time. So when you deposit to Aave, you practically can withdraw it, for example, for the next Ethereum block, or you can withdraw it tomorrow or day after tomorrow. So because there's this kind of like a reserve, you can actively manage your deposits. And this is pretty common that there is different aggregators built on top of Aave and that are balancing these deposits between different protocols. And actually, most of the liquidity into Aave comes with different kinds of aggregators or financial services that are built on top of Aave. Now, what's interesting about our protocol is that when you deposit into Aave, let's say DAI stablecoin, you get in return this so-called interest-bearing tokens, which are called A tokens. And what's interesting about the A tokens is that it's kind of like a receipt of your deposit, and it equals the value one-on-one what you're depositing into the protocol, but they're programmed in a way that they are algorithmically increase in the balance in the wallet that you're holding those tokens. So if you deposit 100 DAI, you get in return 100 A DAI, and that balance will increase every second or as often as your wallet is fetching the balance from the blockchain, which doesn't require any transaction cost or so-called gas. And what this actually allows to happen is that you practically have a permissionless savings account, because obviously you're interacting with a DeFi protocol. So anyone can actually obtain these A tokens, and these A tokens usually are in terms of stablecoins USD denominated, because stablecoins are practically now USD-based, USD-backed stablecoins. And this is pretty interesting value proposition, especially if you're in a country where saving funds in your local currency is a bit risky, in the sense that there is a lot of inflation involved, which means that you're losing whatever you're saving, or that you don't trust your banking system, in the sense that there might be issues of a bank or giving custody to a financial service provider, and there is the custody risk involved. Or it might just be that there is not enough USD-based savings opportunity available in your location with your customer profile. And this is why it's pretty interesting, because anyone can access to the A tokens in a permissionless manner, since you don't need to deposit even into Aave, but you could actually buy those A tokens in an open market such as Uniswap, and you practically get direct exposure to a savings account. And this is actually one of the easiest way to integrate the A tokens, because you actually don't need to interact with the protocol. You simply obtain those tokens, or the user obtains those tokens. And you can actually send those A tokens to someone else, and the increase of the balance doesn't stop, which basically means that this is quite an interesting payment method in the future, because whoever you send A tokens, they will actually receive over time more, because the balance continues to increase. And it's practically automated treasury management as well. And you can also redirect the interest to someone else if you want to. Another thing we have in the protocol I will quickly go through is this so-called flash loans. So this is more of a developer feature, but it allows pretty interesting things to happen. So you can, most of the borrowing at Aave, the consumption side is collateralized, which basically means that you put one currency as a collateral, and then you practically borrow another asset. And in terms of flash loans, what it means that you could actually borrow all the liquidity that is available in Aave without any collateral, and do different kinds of transactions in the Ethereum ecosystem. So you could borrow from Aave flash loan, buy another currency in one exchange, sell it in another exchange, and return the flash loan, or doing other kind of like a use cases. But the only factor is that you have to return that flash loan in one Ethereum transaction. And this is like the beauty of the blockchain, because in each block that you have certain amount of gas, which is transaction cost that you can spend, and each transaction can actually have nested transactions. So you could actually create transactions that are using any kind of a smart contract on Ethereum, and flash loans allows you to do that without upfront capital, and make those transactions without actually having the capital, and you just need to repay the loan end of the whatever you're doing. And besides the arbitrage, you could have a use case which is refinance. So if you already took a loan from one lending protocol, let's say you borrowed USDC and you spent that USDC or converted to real dollars, and you find somewhere else a better loan. So you could refinance by taking a flash loan, closing your old loan position and reopening it in the new lending protocol, and refinancing your interest rate that way without putting the capital that you already actually spent. So it's an interesting use case. And from beginning of the year, we have over $500 million worth of flash loans issued, which is pretty interesting growth. And it provides the depositors of the Aave protocol additional interest rates. And one new use case we have related to the lending protocol is so-called credit delegation. So when you deposit into Aave, 75% of the depositors aren't actually consuming the liquidity. They just deposit to earn. And what you could do actually as a depositor, if you don't want to borrow, you could delegate your credit to someone else, someone you trust, and even seal that trust with a legal agreement, or to another smart contract that could basically do some functionality. And practically, depositors can earn this way more yield. And what's interesting about the credit delegation is it's a nice way for, let's say, non-decentralized finance intermediaries to source their liquidity from DeFi. I could imagine there could be a common pool where credit delegation is drawn. So you could draw stable coins from Aave and take those stable coins and source them into traditional finance to fund all kinds of investments. So that's pretty interesting stuff. Aave is a bit more about how we insure the protocol. I will not go into details pretty much now because we are a bit on the time constraints, I think. But just to mention quickly is that decentralized finance is pretty much about providing safety, and it's very difficult to build smart contracts. So practically, it's very impossible to build bug-free code, and we're using our token economics to practically secure the depositors' funds. So it's practically using equity to secure, let's say, if there is a shortfall event or so forth. And that is the way we are trying to get more adoption, by ensuring that depositors, if there's some sort of a smart contract hack, bug, or failed liquidation, we have a way to recover the deficit with our token economics. Yeah, the next step for us is pretty much moving towards decentralized governance, which we are actually doing at the moment, which means that anyone from the community can participate on how the protocol is going to build in the future, and also earn fees from the protocol and so forth. And we are also working on creating new version 2, which has additional interesting features and new money markets. So the idea of the new money markets is that we can pool the risk in different ways. So we can create riskier or less riskier money markets and let the users to choose how they want to earn. And if there's some developers here or want more documentation, we have docs.aave.com for more information. We also have a Discord channel a server where you can actually come and participate in discussions, ask more questions, and whether it's about Aave or decentralized finance, happy to get people involved. Yeah, this is our team, and pretty much this was the presentation. There's a QR code for our Telegram if you want to join there and discuss more. And this is all about, this is pretty much it.
Great, very impressive, Stani. So thank you very much. And what impressing me is like, oh my God, 500 million in flash loans. So how much are you going to do by end of this year? Do you have like specific plans on that?
It's very hard to say because flash loans depend quite a lot in terms of the how many things are built on top of Aave, because it's more of a developer product to use that functionality and then build for the end users. But the trend is to use more flash loans, either for good or bad. We've seen the flash loans being used for hacks as well, or let's say kind of like a malicious arbitrage. We saw yesterday a one DeFi protocol was hacked of 25 million worth of value just by using flash loans. There weren't Aave flash loans, but still flash loans. But most of the flash loans are actually used for good.
I see. So just let me summarize some key points, because there were actually, as a blockchain use case, many figures. So you mentioned you have like already more than 20,000 users.
Correct.
And you have like the balance between A tokens and flash loans. So what would you say is like the most used product? Is it more flash loans or is it more A tokens?
A token deposits. So people want to earn on USD denominated currency, the stable coin. That's the practically main use case at the moment.
So do you think this is like a trend which is like even growing, following the stable coins who are backed on USD?
Yeah, yes, especially because of the fact that the stable coins yields are pretty good. So our users are earning from 2 to 4% on USDC, USDT, and even more on DAI sometimes. And when you compare to traditional banking system where, and not comparing to the fixed, but let's say the variable, savings accounts where you can just deposit and withdraw anytime you want, you're usually earning close to 0 or 0.01 or zero, like nothing practically.
Good. So what I would like to catch up, thank you, Stani. Thank you very much for providing these. I would like to open the round a little bit more wider and go into a bigger discussion. And I also saw that, please, all followers of this panel, we also have this Q&A. You can raise your questions. Ricardo, thank you for sharing this in the chat already. I just would like to repeat that we have still here room in the feature that you can write to your speaker specific questions officially and privately. So please make use of that. And what I would like to ask is, as a blockchain in use conference, let's go to the user perspective. So what I, as a user, should do to, how as a user can I get into your solution? So how are you attracting new users? I'm always questioning myself, like, is it only like nerds who are watching us and using us, or how are we really getting into the normal market? So please give me an example, everybody of you. How are you going to reach out to new users? What is your strategy?
I'm happy to maybe start with that one. Definitely talks to our approach, which is like you saw earlier, of making things as user friendly as possible. I think that's another one of our key USPs. It's like, basically, we're a fintech company that happens to use blockchain, and I think that's a very interesting space to be in, because if you do a good job of it, the users don't necessarily need to even know about blockchain, which means all of a sudden you have a much larger potential user base. And so that's what we focused on the whole time when looking specifically at the product side of things. And now what we do is just traditional marketing. So we literally are spending money advertising essentially on social media and Google, as well as what's called Google UAC, which is like specific campaigns to get people to download apps and things along those lines. And that's how we focus on it. And it's very interesting also to see where there are different pain points and things in the app itself, or in the onboarding flow, for example, where people have to interact with blockchain or not, or they just have a different level of understanding. It gets very, very interesting at that point. But for us, I think it's crucial to just do traditional marketing and try to reach out to people that aren't already in the industry, and to focus really on the user-friendly front end. And that's what's a little bit different, I think, between our company and the two others, which are a bit more on the protocol level. We're adapt at the end of the day. We also have some other stuff in the background that I didn't even touch on, but I do think if you want to get mass market adoption, it's really important to have super user-friendly front ends, because otherwise there's not that many people that you can attract.
Yeah, I think UX is like the key thing, but you need first to get someone to download your solution, then he can experience the UX. Like, that's the trick behind it. I mean, gentlemen, are the biggest mass advertising campaign where I saw like Bitcoin and Dash for the first time on cabs and in the metro was in London on my way to Coinbase. It was 2.5 years ago. And eToro back in these days were doing a massive cryptocurrency launch with all of the logos like in places where people are really starting maybe to download it. So Markus, what is your strategy to onboard more Celo app users?
Yeah, fully agree with you and Greg here that actually the user maybe shouldn't even know that there's blockchain as a technology in the background. The interface for the user should be as easy as possible, and this in the past has kept many users from using blockchain technology. It is super complicated, and when you build applications on top, it should be really easy to use these applications, even for people who have never heard about blockchain. So one of the ways to make this very easy was also the application we have currently running on top of Celo, the Valora app. So it should be as easy as using, for example, PayPal or other payment apps that are more centralized, but in a fully decentralized fashion. That is one way it should be easy. The other thing is, and I mentioned this before, is like the open source nature, which allows more local projects to build on top of your solution, because of course, C-Labs team in Berlin or San Francisco could build many applications, but we really don't know what users actually want to see in all of these markets. So it should also, you should enable the local communities to build on top of your solution, and open source allows other solutions maybe to connect with what you've built, and therefore I think the open source nature is important. So currently, for example, we have a grant program. The Celo Foundation is giving out grants for local projects who want to build on top of the Celo blockchain their own businesses or own projects. And I think this allows us to connect with many more users by enabling local projects to build on top of Celo and maybe even funding them.
Yeah, grants is a nice arm and try. So you're actively like donating or like venturing, like also new partners. Is it only partners? What is like a nice example? Can you share with us an example of an ideal partner where this already is happening very successful?
So there's like many different programs out there. So one program is, for example, grants, where the foundation gives out funding to projects that want to build on top of Celo. And they receive a grant if they apply. And I think the current or the previous waves gave out, I think 1.8 million in funds already. The current wave you can apply for goes until November 6th. And I think around 200 projects already applied for a grant. There's also a boot camp running for projects who want to learn about building on top of Celo. And then there's also other funding initiatives. For example, one of the early backers of Celo project, BerChain, is running an ecosystem fund that invests equity in projects who want to build on top of Celo. So there are many different initiatives to get projects to actually build on top of this on blockchain, for more adoption in the different markets. And the other way is maybe what I shared before, the Alliance for Prosperity, projects that are already existing and want to open their user base basically for, or use Celo technology in their user base. So for example, mobile operators or charity organizations who want to use Celo with their users.
Interesting. Stani, how are you onboarding the non-nerdy users?
Yeah, we're also like onboarding a lot of kind of like DeFi users that are not Aave users. So that's pretty cool in the sense that like each and every project in the ecosystem is having their own fair share of adoption and educating users on what are the benefits of decentralized finance and all the properties like the non-custodial relationship or interaction with the protocols. And this is something we're doing like in our part quite a lot. So we educate and kind of like we want people to understand like what kind of benefits you get from DeFi and how you can use them. User experience is another thing. I think this was brought up as well here. And what's interesting about that is that user experience has become quite good now in decentralized finance. I still remember a couple of years ago, there was just too many steps before you could actually do some sort of let's say, deposit transaction or borrow transaction. And today, once you get connected into the Web3 world, which is now the kind of like a bottleneck of a bit of in the adoption and user experience, is that once you get connected and your account is funded, it's very simple to interact with these protocols. And it's actually even simpler than Web2 because, for example, in centralized finance, because let's say you want to trade from one currency to another, you could go to Uniswap, super simple user interface. Let's say you want to get the best rate from all of the DeFi protocols in trading, you go something to Paraswap, which is an aggregator. You want to deposit your funds, you go to Aave. There's plenty of choices, and the user experience here is the interoperability and the permissionless nature, because you could just point your URL to another DeFi application and you're practically connected. Whereas in Web2, when you have to, you want to get alternative service, financial service or application you want to use, you have to onboard there. And this is kind of like the comparison, what's there now in Web2 and how the Web3 improves that. But still there is the issue of kind of like the bottleneck of getting people connected to Web3 and understanding the measures they need to take to basically secure their, let's say, wallets and so forth. And I think here we're doing a lot of work in terms of integrations and also getting traditional financial, or let's say fintech market participants to interact and integrate these decentralized financial protocols, and also practically giving an option for the users not to actually store their keys unless they actually want to. And this is kind of like a middle step of getting more people involved in DeFi, either directly or indirectly, where these financial intermediaries are actually participating and managing their funds. So I think those two things are pretty important for us.
I actually agree with quite a lot of that, especially, just want to make a few points here. I think especially like the bottleneck between Web 2 and Web 3, right? That's something we also see, which is very tricky. It's like, how do you get users that don't already have crypto into the market? And that's also something that's a little bit different. I think like Celo and Dstoq are more aligned than, for example, Aave in that particular regard, because on the Aave side, it's like, okay, you have a user base that has, they have some ETH, or they have some Bitcoin, whatever it may be, and they want to do some lending on that. So cool, they've already kind of like got some funding in one way or another. Whereas the challenge that's one of the challenges that we have is, okay, how do you get people that don't have any money in crypto? How do they get a deposit in the first place? How do you get funds into the ecosystem? And once it's in Web3, then it's super interesting. There's a massive plethora of different types of products, and the ones we're talking about here are just kind of some of them. But once that money and that value is starting to transition into Web3, which I think is something that will only trend up over time personally, because there's so many different interesting applications, then things become super, super interesting. But yeah, I mean, for us, it's one of the tricky things still is getting value into the ecosystem. And it is difficult to do that without partnering with other people. You need some traditional type of rails, and that's still a big challenge, I think, in the industry.
I think the point is quite interesting, and I would like to give another topic about the user perspective. So we all want to reach mass adoption, and we now shared like how you're getting new users. So what is your situation? Are you generating completely new users which never use these kind of services, or are you taking users away from classic competition? Is like someone leaving Trade Republic and then coming to you guys, Craig? Like what is your competitive situation from where your users are coming? Do you have the situation like that?
Yeah, sure. I mean, in our case in particular, we're focusing specifically on emerging markets where mostly there is no competition really, or very limited competition. And that's also where we have the biggest value proposition. If we were to compete with Trade Republic or with Robinhood or something along those lines in these developed markets, us as a company and us as a product, we have a much less, our value proposition is much lower because people in those markets already have access, they already have options. Maybe some of the fees are slightly smaller on others, maybe there's more assets on a different competitor. There's lots of ways you can look at it. And so we don't really compete in markets where there are big incumbents already in place. We're rather looking at the countries where it's literally just not possible. And it's pretty crazy, actually, how many of those countries there are. A lot of places you can invest, but only locally. So think about like Nigeria or Brazil, Argentina, South Africa, even Philippines, Vietnam, even like these are some of the markets that we look at. And in those markets, oftentimes you can only invest locally. So you have no access to buy a share of Apple. And so what happens if you are a person in one of those countries and maybe you want to save money to send your children to school? Maybe you just have a little bit of extra money every month that you want to put away, but you don't want to have it in your local currency. Then what do? You know, how do you get access if there is no access there? And that's where we come in. So we're focusing specifically on those markets where there is just a problem where people have money, but they don't have a way to externalize their money into a globally diversified asset base. So from that perspective, we see ourselves as onboarding more new users and specifically, you know, first-time investors. The fact that we use blockchain, that's the way we're able to do that. That's the way we're able to connect countries that, you know, users from different countries at the same time. But it's not about blockchain in our case. It's about empowering people to be able to invest on a global basis. And from that perspective, it's mostly just new users, first-time users.
Markus, hand over to you. First-time users. Are your target group, is your target group Facebook users, like the future Libra users?
Yeah, same here. We're also targeting mostly first-time users, as the majority of people out there are first-time users, and I think we've mentioned many of these things why people are currently not able or not using blockchain-based solutions. It's not easy to use them. The throughput is very low. It's very, it's maybe costly and maybe also not possible because you need different currencies for gas and all these reasons why not blockchain experts typically shy away. And therefore building something that every smartphone user out there can actually use, no matter if they are blockchain beginners or not. Building something where you don't need different currencies for transactions, building something stable, secure, open source. I think all these points are important when focusing on new users. And I think it's a very good point that you mentioned Libra. Libra also for Cello came at a very interesting time when they announced that Facebook is building also a blockchain solution for their users, because Facebook actually put these words, stablecoins, for example, on the map of the people out there. All of a sudden, the German news broadcasters talked about stablecoins. Every central bank in the world and every regulator in the world all of a sudden said we have to think about blockchain technology. Maybe we should put regulation in place when companies like Facebook are building something like this. I think, and I said this quite often today, I'm a big believer in an open source and permissionless system, and therefore building something that everybody else could use for maybe for their users in different markets. where everybody can participate and where everybody maybe can build their own business on top, is probably the way to mass adoption here. But yeah, certainly it's important to have these players also in the field, to have a lot of people think about blockchain technology.
Well, again, I hear blockchain quite often. Thank you, Markus, for delivering this one. Like, gentlemen, question to all of you, like, why is blockchain enabling your business? What's the key USP in blockchain for you guys in here?
I can just start by saying that, I mean, practically our assets are in the blockchain. So I mean, that kind of leads to the idea of that we want to have a system where there's actually interest rate market on those assets. And why decentralized finance is because practically you can access those rates with a non-custodial way, but more importantly, you actually have a transparent market of this interest rates. So what we're actually using is the blockchain security to be not just secure the assets in the protocol, but also the data and publicly kind of like show it. And previously, usually the biggest interest rate decisions have been made, let's say, regarding, for example, Libor in a cafeteria by 9 persons in London, where big amounts of interest rates are dictated. And what actually decentralized finance and Aave allows is that you have more decentralized way to create those interest rates on chain, the interest rate formulas, and how basically the supply and demand meets. And of course, like the another value proposition is then that those rates are then accessible to anyone with the permissionless form. So there's really difficult to kind of like create similar market in a way where you're eliminating this functionality, because kind of like you're taking out pieces that actually makes the product better. And in essence, we're actually using blockchain because it makes our product better end of the day.
Yeah, it's the same for us.
To hear that one, it makes the product better.
Yeah, it's exactly the same for us. We basically use blockchain in a way that cuts out a huge amount of intermediaries. You know, just literally all of these fee-seeking entities that a user and another user, if they wanted to transact with each other, you know, there would be all these people in between, and that's where blockchain for us is good, because it cuts all of that out and then allows us to deliver a product to users that's much better. Basically, we allow them to interact directly with each other. I saw actually there were 1 or 2 questions around a bit of how this works in the Q&A. So maybe I can answer some of them. And it also speaks exactly to your question of, you know, is blockchain an enabler? For us, it's definitely an enabler.
Yes, feel free to grab one if you want. If this is good, feel free to grab one. I mean, we are super.
Yeah, sure, exactly, yeah. So I mean, there were some questions on how the tokens work and what the rights are behind it and all of that. And this is linked also to that question. So basically, there's like 2 sides of our business. The one thing that I showed thus far is the consumer facing side, you know, the app. That's what's actually at the end of the day, it's obviously how we reach users is through the consumer facing side of our app. But then we have a whole infrastructure side of our business where we're connecting traditional finance to the world of blockchain, essentially. And what we do there is we have another company in our group that will buy all of the assets, and they hold them with a custodian in Europe, with a bank, basically. And then we create a token on the Stellar blockchain, and that token is then tradable to users that have done KYC, essentially. It can be through our app, it can be through someone else's app, it can be in a variety of different places. We basically just, on the consumer facing side, built an interface that allows people to interact with the blockchain itself. So then with that, it's very interesting because we can have a user in South America literally trading directly with someone in Nigeria. They place one user places an offer to sell, gets broadcast to the blockchain. Other users sees that offer and they decide to take the other end of it, and they're trading directly with each other. And this can happen literally in 2 to 5 seconds on Stellar, that whole process. In a normal financial system, that takes 2 to 5 days. So yes, you can trade, you can place it. Then what happens is all the brokers and banks in the world, they look at, okay, at the end of the day, how many trades were made by all of our users? And then they submit that to a centralized entity, which nets these things off against everyone else. Obviously, there's fees along the way the whole time. And that whole process takes a really long amount of time. And it also impacts business models. So if you look at Trade Republic, for example, or you look at Robinhood, they can't go and launch in 100 markets. It's not possible. They have to go in each market that they want to expand to. They have to apply for a new license there. They have to do a whole thing. It's centralized in every case. And even if they did that, their users wouldn't be able to trade against each other, not directly. They would still be going through their local centralized institutions, which is a big part of the problem. This is why fees are so high in emerging markets, because it's just inefficient. And so with our case, we cut all of that out by allowing users to trade directly with each other. And our business model actually doesn't rely on us having to be licensed in all the different entities, because we never hold the customer's funds. So that side of it is non-custodial. You know, users are always in control of their own funds. It's something we have kind of in common with all of us here, the fully decentralized approach. You know, we never hold someone's private keys. We couldn't even take their assets if we wanted to. It's physically not possible. So it becomes very, very interesting from that side, how you've got a product that's just substantially better than the centralized version of it, based on the fact that blockchain was used in some part of the technology.
So Greg, what you're saying is that I can be basically any user living on this planet Earth can be your user, like any human, because we can access your solution from everywhere.
That's, in theory, that's possible, yeah. It's not available in all countries right now. I mean, we launched a bit over a month ago now, so it's very, very recent that we have launched. We're available in more than 100 countries, and again, it's specifically focusing on emerging markets. There are some countries where our app is not available, and that's mostly because of costs, where if we were to have the same product in that app, we as a company in that country, we as a company would have to incur a whole lot of extra costs to set it up there, which we don't have in other markets. So it's a complicated topic, but in order for us to deliver product to people in emerging markets, we focus just on those emerging markets themselves. And often that means that our cost base as a company is better. But yes, theoretically, it's possible for people anywhere in the world to consume essentially or interface with the Stellar blockchain via our app. But in reality, no, we don't allow it in all countries. It's also a risk thing, you know, like the States is obviously pretty negative around blockchain in general. So we just avoid the States based on that alone. And there's a few examples of other examples like that. But yes, theoretically, that's the interesting thing, is that people from all over the world can trade directly with each other.
So when it comes to risk, what you just said, and from everywhere in the world, how is KYC and AML, all of you three, affecting? Is this a normal process, or is this something where you wait for regulation? How is the status on that?
I've been talking for a while. Maybe one of you guys can jump in. I'll come back to that one.
Yeah, I think KYC AML is very important in that field, and it's also, I think the whole industry needs clarity in terms of regulation here. Celo as a blockchain or as a platform, being open source, is basically the technology or the platform where transactions live on. So for example, access on and off ramps to these platforms could maybe be regulated. So regulators are already doing that by looking at the exchanges and so on. And I think that makes a lot of sense. Therefore, yeah, of course, this is important, because then also non-custodial solutions that live on these blockchains, the regulator needs to have a look at it. When we talk to the regulator, we mostly point out the nice thing about a blockchain is that you can, if you want to, have a look at the transactions, at the members of that blockchain or the participating addresses. So also for the regulator, here's a lot of opportunity that you can, maybe monitor things more easily, maybe up to a certain amount. Of course, all this is and especially payments money and payments are a technology, and this technology hasn't changed for many years now. And now new technology finally is coming that enables so much more things like smart contracts and so on. And therefore also maybe central bank digital currencies are something the future brings. And also here in this technology, you could have interesting features, for example, privacy up to a certain amount for your users. And then for payments that are higher than a certain amount, maybe the central bank knows what is happening. All these features can be built, and they can be built into a blockchain, which is nice, and therefore has a lot of also opportunity for very efficient KYC and AML.
Stani, give us an elevator pitch on that.
Yeah, it's pretty challenging to pitch on the regulation side, but I think like what's the value proposition for us definitely is that the technology kind of like improves the issues that there exist in a way that, for example, what decentralized finance does, it brings transparency. So if you think about like things like what happened in 2008 with the public blockchains, you practically have auditability on everything that is happening. And auditability means you can actually quantify more better risks. And because it's already in systemized form, and that data is there, you could actually even simulate different kinds of scenarios. So that's definitely like a big value proposition. In terms of regulators to realize the full potential, and I think it really takes time, but we've seen already some of the kind of like discussions in the public from different regulators that there definitely is value propositions for DeFi. But end of the day, there's still a lot of problems, as was mentioned a few moments ago on different parts of the regulation. But I think it just, our problem is more of that there is not enough clarity, and sometimes as a kind of like a DeFi entrepreneur, you feel that some of these issues could be actually not maybe solved, but the regulators could actually comment them more, or show a bit more vision on which direction they would like to go with various topics. Yeah, I think that's at least for what I see the regulation space.
Yeah, for us, I mean, I agree with some of that stuff, especially when it comes to regulators. I mean, the interesting thing is also how different regulators are treating the topic, and different countries are, some are further ahead, some are further behind. It's completely different in different places in the world, which is one of the things that's tricky when you have a company that's in the space, which is, I think, I mean, sure, there's protocols, there's also companies, there's, you know, it's different ways to look at it. But from my perspective, at least on the company side, not having a protocol, we did a big analysis of where in the world what's a good country in the world to start, so that you can get some clarity on these questions, specifically from the regulator's perspective. It's something, if you're playing in financial markets, that you just have to do. It's not an option, it's a requirement. And we were very happy, actually, from the regulatory perspective, having chosen Liechtenstein as that's where our whole product and company is structured and run from, because over there you've got a lot of clarity from the regulators. So actually KYC and AML is fairly straightforward for us. We basically we allow issuers of the financial assets, the security tokens, ultimately, to have a whitelist of users who have already been KYC'd, and only those whitelisted users may hold or transact in their assets. And that's essentially how we implement the KYC and AML. And if someone falls out of the whitelist or tries to, you know, transact or something, it seems like there's something suspicious going on, things like that, then it would be on a whitelist level that you can kind of look at whether that person is a permissible holder of the assets, etc. And that's something you can even provide. We can even provide to other companies that are looking to do these types of things. But that might not be possible in a country that doesn't yet know what their opinion is on blockchain, or what their opinion is on these assets and those things. So it really is also a question of where's your company structured, where are your products created, and what's the framework around it. And then from that, it's easier potentially to determine how do you treat KYC, AML, all these other topics. If you're in the wrong country and there's no guidance on these things, it can be super, super tricky.
Yeah, I completely agree on this point. And you mentioned that you are incorporated in Liechtenstein, which I know personally that they just like with the beginning of this year, they announced their new digital act. And this is like in Europe, which is very well prepared for the possibilities of the new digital freedom, which decentralized solutions like yours are delivering now to the market. And the beauty in it is that you can then reach out to 28 countries of the European Union. So, but Stani, I disagree on one point a little bit, that we need to wait or we need to see. We have seen like lots of discussions in many countries, from Singapore to Europe to Middle East. KYC and AML, it is everything regulated. The regulators have done their job. They're rather like now watching us and saying like, guys, what do you want from us? Everything is regulated. We have MasterCard and Visa since 25 years on board, and they are doing business based on our regulation. So I think rather that if we have DeFi products which are not sticking to it, and I assume that Aave has a lot of these, this is the task, like maybe to find more work and discussion, but I also would wait for the regulators, because this is like always a long tail. And Craig's example, in when we know what we have, we choose the right country to incorporate, and then we kick off the business. I think this is a very, very successful approach to get into very fast mass adoption, to onboard legally lots, hundreds, thousands, or even millions of users.
So Rafael, I think we have quite a lot of audience questions, and a couple of them are also repeatedly posting the same question, waiting for an answer. So maybe at this stage, it might be a good time to jump into a few of the attendee questions and take up a few of those.
Let's do it. Which one was most repeating, Ricardo?
A lot of people are wondering how Dstoq's model without paying any fees works. I think that's a question that came up 4 times or so.
Yeah. So basically, on the app side of our business, we don't charge any fees there, and there's no commissions or anything along those lines. What we're going to do, so there's no revenue generated by the app itself, but down the line. And the reason that is the case is also because we're focusing on mass adoption, getting as many users as possible. And then you can start introducing different types of products down the line. We're also going to do things like subscription fees for the app, where you can opt in to get new types of products or services. Maybe it's even something like a backup of your secret phrase, for example. It could be things like subscription models where people are auto investing, stuff like that. So you kind of just have money that's deducted every month because you don't want to think about it. There's lots of other ways that we can generate revenue down the line. On top of which, there's also ways on the infrastructure side of our business where we synced into the traditional financial markets that we can generate some revenue there based on volumes. We just have very efficient access also, and don't pay any fees when we're purchasing the securities. So there's some small inefficiencies there that can occur over time. Not something we're really focusing on right now, but that's an interesting way for us to generate revenue down the line. And there's also a big later on B2B element of our business where we can offer to other companies who, say, for example, are a digital bank, or they are maybe a crypto wallet, where they have users and they've got assets on their platform, but maybe not the best ways currently to generate revenue. And we can offer to them essentially investing as a service, where they would interact through our user base or their own user base, all on the blockchain directly through APIs, essentially. So the whole thing is structured in a way where there's a lot of different elements to generate revenue for ourselves and for others down the line. And we choose in our app to not charge fees because it's an amazing value proposition. Someone else that has an app and wants to offer that as a service, they might choose to charge fees. Then we can do revenue share agreements with them and things like that. But yeah, at the moment, really, our business is focusing on user acquisition as much as possible, and not on becoming profitable as much as possible. We rather want to scale up and become dominant, and from there, yeah, things become very interesting. I hope that answers the questions.
If not, then please feel free to post more of these or more details. So what I can also see in the history is a question, and it also comes to Craig. How does the partial Tesla share works actually? How is that possible?
So yeah, okay. So basically, what happens is I was alluding to it earlier, but I can talk in a little bit more detail. So we would buy, let's say we buy 1 share of Tesla, then we create 1 token for each share. So you basically have a share sitting with a custodian, and you've got a token that's tradable on the blockchain. And obviously, tokens themselves are divisible. So you can buy a fraction of a token, and that token can be purchased from someone else, and the divisibility comes in on a token level. At the end of the day, there's still the 1 share sitting in the bank with the custodian. So that part of it's not divisible, but the what you can purchase as a user is divisible. And what you actually buy as a user is the right to claim the underlying asset at the bank. So if you don't like Dstoq, or if you actually just want to cash out, or if you think that the prices are too high on chain, that can happen, then you can still always choose to redeem the underlying. That's also another way we make revenue, by the way, charging fees in that redemption process. And so in that way, basically, the fractional shares are implemented on the token level, but you always have the full shares in the underlying.
Is there any priceless model with the others? Markus, Stani, do you have like services who are completely free of charge for the users?
Yeah, basically in our case, we don't charge any other fees except the flash loan fee for using the flash borrow capital. So all of the interest that is paid by the borrowers are going to the depositors. So Aave isn't as a protocol, it's not collecting fees, but this will probably change with the governance in the future, that they will activate this kind of like a fee collection that goes to the Aave reserve and basically is distributed there from there to various stakeholders. So, but I think at some point we'll see like many of the decentralized protocols starting to somehow collect fees, and that's quite interesting for me.
For Zello, so for example, the app, the payments app is free. You can download it in the Play Store and the App Store, or go to valoraApp.com. Transactions on the Zello blockchain need certain gas fees, and these gas fees are then used to keep blockchain alive. So validators basically get rewarded by validating transactions on the Zello blockchain, and therefore a fee is necessary. One governance vote that was carried out on Zello was also that the community decided to have a carbon neutral, or currently even carbon negative blockchain. So part of the transaction fee goes also to offsetting the carbon used for a transaction. Of course, it's low, the impact, since it's a proof of stake network, but still there is an impact, and therefore it's nice that also a fee goes to offsetting this, and the blockchain itself actually is carbon negative now.
So you touched now the very hot topic always about the energy consumption, which is like you claim to be carbon friendly. So how energy friendly are your companies, guys? What protocols do you use? Like, what's your energy consumption?
That's a good question, actually. I'm not entirely sure about the overall state of blockchain, but it's super efficient in terms of the transaction fees and things like that, because it's I mean, they just have a different consensus protocol where you've got trusted basically entities in the protocol itself that are essentially doing the validations rather than having to be an adversarial environment. So that's why it's also so fast, and the fees are super, super low. So I think the actual carbon footprint of it is very low, because structurally it's a little bit different, slightly less decentralized than Bitcoin, for example. But then the upside of that is, well, it's much cheaper and easier to run and much faster.
Yeah, we have been in talks with classical banks who always deliver like cash, and we know that there are the very basic comparisons between the digital payments from by MasterCard or Visa, and then to cash. So there is also this transition from digital normal fintech payments to decentralized solutions. So I think this is a progress where we will have more and more better footprints. And this is a technology which is just like increasing in quality and lowering the energy consumption I see for that. So while grabbing the example of Deutsche Bank Ventures, I met these gentlemen in this year, and they are looking for investments into new fintech companies. So gentlemen, what would happen if tomorrow Deutsche Bank Ventures is popping up and announcing to invest or to initiate a partnership with you guys? Is this something this is your strategical wish? Yes or no?
It's an interesting one for us, given how close the business interests are between them. So it's something, yeah, we've also had conversations in the past along those lines. And I think for us, actually, and maybe this is an interesting point to bring up, but I think America is much more interesting from a fundraising perspective, because the funds there are generally they're happier to see a big vision, you know, a company that wants to achieve some massive global goal, and they're happy to put a lot of money towards that at an early stage. I think in Europe in general, one of the problems you have from a fundraising perspective is funds and big entities like you're mentioning. They want to see, okay, cool, well, you've already reached that critical adoption phase. You already have, you know, a massive amount of users. You already have a business model that's very profitable, et cetera, et cetera. And at that point, they'll put their money to work. But the blockchain industry isn't at that point. And none of our applications are really at that point. So, okay, I'm not saying anything about other people's companies, but I just think in general, the profile from an investment perspective fits better to the American Silicon Valley model than it does to the European one. So in particular, when thinking about these strategic type of partnerships, I think it's very important not to get into them too early, because they can also structurally change the direction that your company has to take, you know? So I would rather, for us, have a big vision, focus on actually the emerging market side of things, rather than have a strategic party involved that potentially would want to take the company in a different direction. I think that's one of the challenges that we all face if we want to do traditional types of fundraising, is that you got to find the right types of investors for your particular business model. And yeah, that's something that's important for the whole industry.
Yeah, I think the interesting part is that I mean, as DeFi is practically permissionless, I mean, they have many ways of participating in the ecosystem, and even build different kinds of proof of concepts. It doesn't need to be always on the mainnet. Even it could be something in between permissioned or testnet configurations and deployments. But I think we'll probably see in the future more traditional finance getting interested in especially in DeFi and various blockchain use cases. And I think, at least from Aave's perspective, we definitely welcome everyone in that sense. And because I believe it's just the future of finance. It just creates a lot of efficiencies, and I think every customer of every bank should deserve to benefit from this efficiencies.
Yeah, we see the same. We see the same. But I also see there are still some questions Q&A from our participants, which I would like to go through. So gentlemen, there are two questions in terms of country availability. When do you plan to implement in the Netherlands? And when is Dstoq available in Germany? How's it going? Are you all in the Netherlands active?
We are not. I kind of touched on that one earlier. sorry, I actually I just answered the question on Germany in written while you were asking it, so that's why it disappeared. Yeah, we're not available in either Netherlands or Germany at the moment, and kind of not envisioning for that to be the case relatively soon, because we're focusing on the emerging market side of things, and yeah, we really want to help people there. So that's all from my side.
Stani, Markus, we can get you Netherlands and Germany.
I mean, currently, the first stablecoin that lives on Celo is the Celo dollar, stablecoin that is tracking the value of the US dollar. It is up to the community to decide which will be the next stablecoin. Should be euro. Currently, for example, the community in Brazil is very active, promoting a Celo Real, living on Celo blockchain. So yeah, in future there will be a Celo Euro for users in, for example, the Netherlands or Germany. But of course, you can already use the blockchain for transactions now. You can also use Valora app by downloading it. So we are live in these countries. I think, yeah, other currencies, we will see other currencies in future also on Celo.
I have to say that the euro stablecoin is quite important. I mean, it's basically powering the you know, like the European part of decentralized finance, because currently if you earn yields on US dollars, practically if there's volatility between, and especially if you're doing that with euro funds that you converted into, let's say, USD-based stable coins, and there's volatility in between, you can actually suffer more of the currency risk of converting those earnings back to euros compared to what you're earning in DeFi. That is why the euro-based stable coins are quite interesting. And once there is something like that, of course, I think it pretty quickly might be added by the governance into the Aave protocol. The protocol itself is available on Ethereum, and anyone can build any kind of a practically a access point. I mean, there is over 80 different access points into the Aave protocol, and I think kind of like the missing key piece for a bit larger, wider European adoption is definitely the euro stablecoin.
But Stanley, if we are like with you, there's also a question from Marcel about the Aave flash loans. Will this be the Aave flash loans possibility in users and front-end product? So not only high-tech developers can use it. Are you going to implement Aave flash loans for this? What kind of setup?
Flash loan is basically a way to create functionality for the end users, mostly, of course. It basically means that you create a product where instead of the user using own funds, some transactions are replaced with flash loans and having this efficiency. And actually, like, the end user will be the person who presses the button will be the end user and in the background the flash loan is executed. But what's interesting is that if the question is also about whether normal people could go, let's say non-technical, could actually try flash loans and create flash loan transactions, the answer is yes, because practically there's already projects called, for example, Furu Combo on the Ethereum, which allows to do no code flash loans, and not just flash loans, but create different kinds of transactions where you might take a flash loans, you might buy a currency in one place, sell it in another place, and create this kind of like a scripts and automatize those. And I think like this kind of like a no coding part of blockchain is also quite fascinating, because quite a lot you always need to be a developer to build interesting products, but it's also adoption question if you can build things without actually having to go into deep coding, and you know, because DeFi is all about this interoperability of money Legos, and if you can do it also in a non-code way, that will actually increase quite a lot of interest and also to some extent adoption.
Yeah, thanks. So I see there is another Q&A just solved by Markus. So we go back to Diana's question. And this is, how are you meditating against a similar Maker Die Black Thursday event that has resulted in litigation in California? Is there a guarantee for those staking their coins? Who knows how to reply on that?
That's for Stani, right?
What was the question?
So I think it's a Maker Die Black Thursday event. So and it happened in California. I'm not aware of this. So maybe you can write back to the person in written form. This would be maybe easier.
Actually, Diana is still here in the call. We can give her the mic and she can elaborate. But I think she's actually not in the call anymore. So she already left.
I don't have a lot of information on the litigation pending, but in general, I think about Maker Die, there is a rather indirect link between supply and demand on the Maker platform in its stability mechanism, and on the Black Thursday event, the collateral of Maker Die, a stablecoin that is living on Ethereum, lost a lot of value. ETH was tanking, which led to many CDPs being called, and this led to less supply of Maker Die stablecoin, and therefore, even though Ethereum tanked in value, DAI then actually increased quite substantially in value, trading at 112, I think, because there was just less supply, while there was a similar demand for this stable coin. And I think this match between supply and demand in stablecoins should be as direct as possible. This is why we chose a bit different approach for designing the Celo stability mechanism, which is trying to meet, or the supply of stablecoin always tries to meet the demand out there to keep price stable. But yeah, it's, I think, a topic you could talk also quite long about the economics behind all these different stability mechanisms of stablecoin. Yeah, and again, I don't have a lot of information on the litigation out there.
I can comment in the sense that actually, like, I really like the one thing about the MakerDAO system is that practically MakerDAO is using the MKR as a way to passively let the MakerDAO token holders to basically take risk of the protocols, because they're making those risk decisions. They're deciding on basically the smart contracts that are deployed, the different kinds of risk factors such as collateralization ratio, which is how much you can borrow against your collateral. And what happened in Black Thursday is that they successfully used that MKR kind of like equity by minting more MKR to cover the protocol deficit. The actual problem is that they didn't then, they covered the protocol deficit, but they didn't cover the vaults that had actual loss, which is, in my opinion, not very good thing. But the system itself is functional. The kind of like insurance system, it's a bit of what we have in Aave, but we also have this kind of staking facility before that there's actually the staked Aave that is the first line of defense to ensure the protocol. And I definitely agree on the stability, in the sense that practically in the MakerDAO Black Thursday system, it was actually a smart contract bug, because the smart contract allowed to do things that it shouldn't do, which was zero auction bids, in the sense that practically you could get a free collateral out of the system because the gas prices were super high, and liquidity wasn't moving to liquidate those cascading position. And that shouldn't happen in the first place. And also I think the MakerDAO systems, one issue is also kind of like they don't have negative rates, so they basically have the kind of like a one-sided interest rate market, which allows you to control on one direction the supply and demand of the system. And I'm not sure how they are going to later fix this.
Thank you, Stani. So, and I'm also happy that we could discuss all questions which were raised by the participants. And thank you, Markus, for starting this very last topic. Gentlemen, we are coming to nearly to an end. And before I will give the last word to our host, BerChain Ricardo, I just would like to summarize some things. Today, we talked about blockchain in use, and all of you delivered a super strong story and lots of examples that there were like thousands, there are like even millions of potential users who are out there. I heard that Dstoq just initiated and started, and we have like the situation with Markus and Cello that they already reached out to 3,500 people, and in the network which they would like to access, there are like 500 million more users. So we see a great potential. And the same with Aave, you have like more than 20,000 users, and only this year you only made 500 million of turnover and flash loans. So these are all strong figures, gentlemen, and congratulations on that. This is like just the beginning, and I think it's also a wonderful example of how blockchain is in use and how we are going to change the financial markets of not the future, but tomorrow. So thank you all for your inputs. Thank you for your nice use cases. And thank you, Ricardo, for arranging this session and hosting us. And I leave the last word to you.
There's not much more to add after these great closing words. Rafael, thanks also from my side to all the speakers and for the great moderation and for the attendance, and also for our partner, Berlin partner, for helping at making this event happen. So this event has been recorded and also streamed on YouTube. So this will be posted on our social media and our YouTube channel. If you liked the session so much that you want to rewatch it, or if you want to share it with anyone that this could be interesting to. If you want to connect with any of the speakers, you can find them on our social media channels. We have been posting about them quite a bit. So I'm sure you'll find lots of ways to connect with them. And with that, we are officially at the end of the event. So thanks, everybody, and have a great evening. To close off, we have another 4 events this week. So you can see everything on our website, berchain.com. There is a website that explains the 4 other events that are happening on IoT, mobility, supply chain, and public services. The public services event is actually a hybrid event, so you can join online, or you can also join in person here in Berlin at Factory Görlitzer Park. So I hope to see some of you also in the other sessions. And with that, I wish you a great evening and a great rest of the week. Thank you.
Thank you, everyone.
Thank you. Bye-bye.
Thank you.
Bye.
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 Bye.